And welcome to Curiosita of June 2022. It is indeed exciting to see you all this evening. I'm Marla Coonan, the Executive Dean for Strategy and Stakeholder Management here at the Institute, and I love being one of the curators alongside Prof. Javier Klopper of Curiosita. Just as a reminder, because I see there's a couple of people that haven't been before to Curiosita, Curiosita really is about instilling our curiosity, and it is about hearing and listening to what people are saying. It is not a formal presentation with PowerPoints, etc. It is an engaging discussion and debate that we are meant to have with our guest speakers. Today, we are certainly having wonderful speakers in our midst. So first and foremost, we have Connie Bloem, who I'm going to be introducing to you, and then we have our student speaker, which is Mrs. Mangani. So, Moyahabo, hopefully you have joined us in excitement. I know for the doctoral students, it's often a little bit daunting. So I wanted to ask you guys, while I wanted to try something different, I always do quite a long introduction to our guest speakers. But while I'm giving the introduction, I would like you to put in the comment section why you chose to come here today in terms of what do you actually want to hear? Why did you look at this topic and think, I'd like to be here? Or what do you expect from the speaker to actually discuss and talk to you about? So for some of us, we just enjoy an engaging topic. For others of you, you might have looked at the speakers and said, well, I'm actually interested in whatever it may be. So, for example, the future of financial instruments that Connie is going to discuss, etc. So if you don't mind, pop it in the chat section, or you are welcome always, as you know, to unmute your mics. And then we have a really exciting part, which is that we enjoy always having with us in our midst Lita from Three Stick Men. She does the most magnificent graphic illustrations. Lovely to see you, Lita. And those of you that have seen Lita before, you will know she has exquisite illustrations. Thank you for joining us. So we'll see Lita after each of the sessions, and at the end, she will produce a holistic image. So Connie, you're not only somebody who is an incredible managerial leader, but you're certainly somebody who's committed. People are really excited to hear you speak about the future of financial instruments in a decentralized and global marketplace. I think your experience in terms of the work you've done as the co-founder and executive head of Mesh is really incredible, because you yourselves look at decentralized global marketplaces, financial infrastructures around these instruments. I think in terms of this, you provide access to companies and people, financial markets. So you've got a very deep understanding, as well as this passion for trying to liberate and transform financial institutions and capital markets, etc. So we're looking very forward to see how you utilize these methodologies. And in terms of me, since I'm starting out, I will say to you that what I'm really excited about is being able to really try understand how you use design thinking and agility in what you do, because I think that's the way for us to be, in terms of working with those aspects. And many people have also said they enjoy the discussions and insights generally at Curiosita. And so very excited the role of National Metrology Institutes in supporting development in the Southern African development community. We look forward to hearing what you have to say, but we also thank you for contributing to humane sustainable societies by looking at stabilizing financial spaces to actually be able to innovate, because if they are not stable, they cannot innovate. That's just my own personal opinion. Thank you so much for joining us today, and we look forward to engaging with you.
Thank you very much for the introduction. But I'm so excited to speak to you today. When I was approached to actually speak at today's event, The first thought was absolutely. I love sharing what I do and how I do that with a larger audience. I love to have those discussions. So today I've been asked to speak about the future of financial instruments in a global and decentralized marketplace. So let me introduce myself, and thank you already for the big introduction given. As stated, I am currently the executive head of Mesh. My educational background was interesting and a bit of a mixture. I did my industrial engineering degree in Pretoria. I finished that out in 2014. Then I went into the working world to see what is it that is exciting and lovely out there. And I quickly returned back to university, and I worked and I studied consecutively, and I did my honors degree in financial engineering. I recently submitted a document called a master's in engineering. Let's hope that they do accept that one. And obviously with my professional experiences as noted. But when I'm asked to explain what it is that I'm doing, I actually explain that I do 4 things. I take decentralized technology, or otherwise known as DeFi, decentralized finance. I combine it with something called tokenomics. I've combined that with things called blockchain, and I combine it with things like platforms. And we as a team build beautiful things like this. So this is just a screen of the platform that we're currently building. It's called Mesh, and we love it. It's available to all South Africans. Please go sign up and play around and see what we're doing on that side. But this is what I do for a living. I build systems, I compress platforms, and I build businesses around it. And if you're not a person that talks about what you do, who is it that I am? I've asked a couple of colleagues to give me an opinion today, but I think the best thing that I can share is this. I like looking towards the future. I am very self-confident. If you haven't realized that I love speaking, and I speaking with my hands with that as well. Some people would say I'm controlling. I call it assertive. I would say I'm innovative. I have an extremely big drive to solve any and all problems that comes along. I'm extremely inquisitive. I make a lot of decisions on a daily basis, but I do at all times try to respect people, processes, and the work that they do. And this combination of personality types, I would say, actually brings forth a unique ability to actually work within the financial industry and work with this kind of technology space. So the things that we are going to cover today is we're going to do quick introductions. We're going to find out what is the topic of today, what is currently going on in the financial industry. I have to give you a baseline of definitions, but I'm not just going to ramble off a list of definitions. What is a financial instrument? What is a market? What is this? What is that? I'm going to do that through telling you a story. Then we're going to dive into some very interesting things called Web 3.0, the metaverse, the new digital economy, assets for the new economy, looking forward. That's just some of the things that we are going to cover. But before I start covering those components, I'm going to ask you some questions. Maybe some of these things ring true to you. So the first question that I'm going to ask is, do you know what a financial instrument is? And do you know what the purpose is of that instrument? Secondly, what is a cryptocurrency? Do you know that there are more cryptocurrencies out there than just Bitcoin? Do you understand what a marketplace is? And also, do you know what the role is of central authorities within this world? These are some questions to ponder. And if none of these rang true, maybe you followed a couple of topics within the news over the last while. Maybe you've heard something about NFTs. Maybe you've heard about the GameStop scandal. Maybe you've heard about the 2008 financial crisis. Some of these topics we will cover today, and I hope at the end in our discussion time, we'll also have a lovely couple of words mentioned about each and every one of these. But first, story time. So financial markets, assets, and time value of money. When I'm done with this section, I would very much like for you to know what a market is, what a financial asset is, what is a trade, and what is time value of money. This is the most basic components that you need to know. And this is where design thinking really comes in. This is breaking things down into the most simple components and understanding how people use them and interact with them to understand what job they're trying to do with those components. So first of all, how did the financial markets exist? How did they just magically appear? How do we have things like the Johannesburg Stock Exchange? Where do things like the New York Stock Exchange come from? So they started to exist because of trade. And in the ancient times, think about the ancient Egyptians, the Romans. When humans started going from foraging and farming to actual trading out their components, the one farmer was, well, I'm planting corn. The other farmer said, well, I'm cultivating sheep. But I actually need some of your corn to bake some bread, and you need some of my sheep to survive as well. So what can we do? We can trade these components with each other. And so a market existed where people started coming to a central place to trade their goods with each other to make sure that they had everything that they needed to survive. But some people were very innovative. Some people had better sheep, better corn, better flour than other people. And what started happening is some people started having surplus. And with that surplus, they realized, well, having 20 chickens when I only need 10 chickens is really not serving me anymore. So what I would really like to do is I would like to start trading my chickens, my corn, my sheep for something with equivalent value, but what is not a product. And so money started existing. Now, thinking about in these old days, you walking around with a bag of money and you going all the way home to your farm, and then somewhere along the route, some bandits were waiting for you and they attacked you. So there started to become a need for banks, a place where we could keep our money to keep it safe. Now a bank existed, a market existed, and you would start seeing trade happening more and more. So firstly, there was a market, there was a surplus. I'm starting to put that into the bank. Now I have more and more and more surplus, but people also have too little. So they also went to the bank to ask for a loan. So here we have the age-old story of saying that I have a salary coming in, and I'm not using my entire salary, so I'm putting that into a savings account at the bank. But what does the bank do? The bank actually needs to make money as well. So they're taking your surplus money and they're lending it out to someone else. And here the concept of time value of money starts coming in. So the bank gets a check or deposit in. You sold a lot of corn, you sold a lot of sheep, you have more cash, you give that to the bank, someone else is coming to the bank and saying, please, I need some money, can you lend it to me? And the bank is sure. But the person that is leaving their money with the bank says, I want something in return because I'm seeing you working with my money. So the bank gives them 2%. But the person lending money, they have to pay more because you're taking some of this money, you're taking some of this risk. So we're giving you, you have to pay us 13% to actually lend some of this money from us. And here we see the bank is sitting with a neat 11% there in the middle, and all of a sudden they make profit. This is the backbone of the financial industry. And right here, you learned the best and most basic topics of how the financial industry works. We have products, we have a marketplace, we have assets in the form of deposits, checks, savings, loans, mortgages, credit, and we have time value of money, because the person that is lending money needs a time period over which they're lending it. The person that's saving it has a time period over which they're saving it, and they get a percentage back and forth. So taking these concepts and taking it forward, maybe you've heard about terms like the metaverse, Facebook coming out, Web 3.0, the emergence of decentralized finance, all these weird and wonderful topics floating around. And maybe today I can make a bit more sense of what they are. So where does Web 1, Web 2, Web 3 come from? Well, they most definitely did not come from the evolution of the killer cat apps. So if anyone remembers when email and messages just started coming out, how cool it was to send their friends little cat faces of punctuation that you can make. And during Web 2, something called CryptoKitties came out, and during Web 3, these CryptoKitties are taking a life of their own. Well, this is not really what Web 1, Web 2, or Web 3 is. So let's dive into what it is and how it works. So Web 1 is a time where the internet just started. So it was the early 90s, and it went all the way through to the early 2000s. The internet services were built on open protocols that were controlled by the internet community. So what basically happened is you could read only, remember those static websites where you could just come up and there was someone's blog and the community would be able to create their own spaces around that. And this also is the beginning of MySpace. Who can remember their MySpace handle? Guilty over here. But everyone was a contributor to the web. There were no big companies in this space. It was just a free community interacting with each other and sharing information. But when bigger companies started coming into this space, we saw that the internet started becoming more centralized and more siloed. So we had storage at the bottom. Let's think about Amazon Web Services, Amazon storage facilities, Google storage facilities. And on top of that, they started writing what we call web and applications. So this would be your Gmail, this would be your calendar, this would be your e-commerce shop. And these applications were controlled by larger companies such as Amazon, Google, Facebook, Apple. They created a bit of a monopoly, and you have multiple devices that can actually access the internet. Remember those old dial-up sounds? Well, that was Web 1. Currently, you're sitting in Web 2. You have your cell phone, you have your watch, you have your computer, you have your laptop, you even have your car and your gaming devices being able to access the internet and give you the experience that you want. So Web 3, how does it change, and where does banking come in, and how does finance play with this market and start dealing with it? What is decentralization really? So the most easy way for me to explain this is saying that during Web 1, everyone came to the same source of information. You can see all those arrows coming in, everyone consuming the same source. Web 2, people starting to create some dynamic networks to talk about. And Web 3, you're going to see some blocks coming in here. Yes, the dreaded term blockchain is going to come in, but don't worry, we're going to keep it simple. We're going to keep it fresh. So what is this Web 3 place? Let's start lifting the hood on this box. So Web 3, people will talk to you a lot about permissionless, programmable, decentralized, censorship resistant, transparent, trustless. All these terms are extremely important and make up the basis of Web 3. But what is Web 3 now really? So taking it back to those first two pictures that I showed you, this is the technology stack, if you were to term it as such. So everything is decentralized. All parties decide who and how they interact with. So at the basis, Web 3 is always based on blockchain technology. So previously it was storage and data centers. Now we have blockchain technology taking over that storage. We have a network layer on top of that. So that just says, how do I speak to the blockchain? How do I speak to the place that I'm storing? Then I have a protocol layer. What does it do? It says, how do I take the data from the bottom layers and how do I calculate it? How do I change it? How do I interact with it? Then on top of that, we have applications running. So think about your Bitcoin trading app, think about your email account, think about your calendar. All these applications can run on top of that, consuming the data, consuming the calculations. And then on top, it's you with your application. So think about your Apple Watch, think about your phone, think about all the little applications on your phone, and that is how you interact with that. But to make it very practical, the impact of in your life is simple and as follows. Web 1, you use a username and a password. Web 2, you sign in with either your Google, your Facebook, or your Twitter account. And Web 3, you connect something called a wallet. Now, this change is real. and it is happening. It is happening as we speak. And no, we're not in the Web3 world yet. We are not in a place where that is starting to happen. It's still a pipeline dream, but it is happening. So today's reality is that we have a market valuation of cryptocurrencies that are within the billions. So remember, I said Web3 is based on blockchain technology. What is blockchain technology run on? Cryptocurrencies. So we are seeing that it's going into the billions. That is interesting, isn't it? We thought that Bitcoin was just something that people trade on the side. No, it's a very big economy that already exists. And the second image, so the image on your right hand says, digital currencies are surpassing paper currencies. So what does that mean? You have a very nice curve going from left to right, from top to bottom on your screen. So that means that the paper money in your wallet, there's less of that in the world than the amount of digital currencies that are available. So that means that people are becoming more digitally native, they're becoming more comfortable with using these kind of technologies, and we are seeing a migration towards a Web 3.0 world starting to happen. So let's look at a bit more data. Let's make it a bit more real. We are seeing a seismic societal shift taking place, and I'm assuming that most of the people on the call are millennials and Generation Zs. Everyone, welcome. You were most probably born with a cell phone as an extension to your arm. It's good to have you here. Generation Zs and the baby boomers, we know that they are becoming older, no offense, and there's a wealth transfer happening. So we're seeing the millennials and the Generation Zs coming into the workforce and taking on the bigger, more technical roles. And why is this important? This is important because we all are technology native. That means we are comfortable with utilizing money and currencies that are digital. We're comfortable with managing our finances online. We're comfortable with logging into our application and doing all sorts of complex things that we would generally keep for going into the bank, generally keep for going to talk to people with. And we are seeing this within the critical mass of assets within the financial market space. And this is my space. This is the space that I love to work in. So we're still seeing cryptocurrencies as little babies there at the top, $1.9 trillion. Yo, can someone say trillion as baby? Yes, we can, because the global debt market is 280 trillion. Gold, we all know gold, 11.3 there in the center. Apple, just a little bit less. We all know Apple's one of the biggest companies. And the global stock market, so where you buy your bank shares, where you buy your Facebook shares, where you buy your ETFs, your ETNs, your savings account, that is in the global stock markets. So we can see cryptocurrencies just at the start. It has reached critical mass because people are starting to realize it as a asset within the market. But it's still the beginning. It's not there yet where the third picture is. We're still dreaming about getting to that space. But to enable that space, something is going to happen to our marketplaces. So remember at the start, I mentioned that you went to a market with your apples, with your chickens, with your corn, with your sheep, and you traded it with someone on the marketplace. But you most probably knew those people. It was a central place within a little town that you went to, and you traded with your neighbor, Peter. You traded with his wife, who's the baker. You knew all these people. So that is a typical example of a centralized marketplace. So look at that picture on your left-hand side with the red block in the middle. The marketplace is the place where everyone meets and comes together. Sometimes I can trade with someone on the side, so quickly walk over to Peter, trade out my chicken for his sheep. No marketplace. So we didn't go to the town, we didn't go to the market. Now think about you having your phone in your hand. Is there a central place that you go to? Is there a place where everyone comes together and actually interacts? Most probably on your phone, you will have some application where you can log in and you can trade with someone. You can buy an ETF, you can buy an ETN. Maybe you are a customer of Luno, Binance, Easy Equities, those kind of companies. Mesh, hopefully soon as well. But all these marketplaces are still centralized marketplaces. Now, decentralized marketplaces are coming in, but what are they? What are they supposed to do? So firstly, yes, trade still needs to happen. I still need to be able to exchange my chicken for someone else's sheep. But I don't necessarily need to know who that person is. I don't necessarily need to trust them. So that is an uncomfortable thing to say. I'm just giving Molly the sheep to someone that no one knows. No, it's not true, because technology is starting to enable this. Technology is starting to make sure that you can do this. So decentralized marketplaces are built on blockchain technology. They allow trades from investors to sellers or buyers and sellers and so forth without the use of any middlemen. So there's no one sitting between you and Peter. I don't have to pay something to the bank. I don't have to pay something to a stock exchange. I can trade directly with that person. So in the Web3 world, that means lower fees, easier to access, faster to use. And that is why we say that this is democratizing the financial market. It's making it open and possible for more and more people to come into this marketplace and actually interact and trade in a safe and trustless manner. There are many examples of companies working in this space. Mesh is one of them, but maybe some of these names on screen do make sense to you. It's something that you've heard of, something that you've actually used within your life. I'm seeing things like Paxos, I'm seeing things like Stellar, I'm seeing things like MetaMask on here. Some of these names have to start ringing true for you as well. But as I mentioned, assets are changing. This is a new economy that we're seeing coming out here. Are your credit cards working as efficiently in this space as what they used to do? Is it as easy to game? Is it as easy to buy all the things that you want to have in the Web 3.0 world? Well, no, it's actually changing. Things are being shaken up, if I could say it like that. So the Web3 economy, I said, is based on blockchain, works with cryptocurrency as a currency, has things called NFTs, has things called the metaverse, has things called smart contracts, decentralized finance, and decentralized storage. And all these components work together to form an economy. But how do I pay for it? How do I buy it? So first of all, the assets that we're starting to see are replacing the traditional finance. So it's replacing those coins and those notes and those credit cards within your wallets as cryptocurrencies, central bank digital currencies, and stable coins. They are powered by something called the smart contract, and they principle-driven instruments. We can dive into that within the Q&A section. We have a protocol layer that does all the calculations, that tells everyone who they are, where they have to go to, how much they owe, to whom, and then lastly, they will be giving true and direct ownership to everyone. So this is the basis and the building blocks for the Web 3.0 world. This is the basis and the building blocks of the DeFi economy. And the reasons why I'm so excited about this is that it is changing the face of the financial industry. It's changing the way that we interact with each other. It's changing the way that we trade with each other. It's changing the way that how we interact with our applications. And therefore, it's so interesting to build within this universe and build within this market. I hope that this has created a basis for you to have more questions than what you have answers, because I hear here Curiosita, we think critically and we have deep and meaningful conversations. So let's have that. So any questions and any answers I can give.
So Connie, so Raymond said, looking at the current state of the economy in South Africa and around the world, do you foresee a substantial global financial disruption shortly in the future, and how best we can safeguard ourselves amid this disruption as individuals, businesses, or maybe even as a country?
So it's a good question. I think it's something that you must think deeply about. So the current state of the economy in South Africa and around the world, do you foresee a substantial global financial disruption shortly? And the short answer to that is absolutely. But maybe the question is in how shortly. And if we look at the trends within the market, so the uptake of cryptocurrencies, the research being done by central banks on central bank digital currency, the changes in regulation that we're seeing, we are hoping that this shift will start happening, or not. It's already started happening. We can't stop it, but the major shift will actually happen within the next year to year and a half. But that does not mean that it is a wide-scale financial market crash. It does not mean that there will be wide-scale financial market upheaval, but rather that there will be significant periods of change. And we've already seen it coming. There are trends and indicators that the current market that we're in. So if any of you follow the economy currently, you will know that we have been seeing a widespread downward trend on prices. The S&P is taking a nosedive. Some people are saying that this disruption, this upheaval is actually starting to happen because of the change within the financial industry, the disruption that's coming, the fintech that are coming in the cryptocurrencies that are coming in. I don't believe fundamentally that is true. We've just come out of a global crisis, but I think it's contributing towards it. So yes, we're seeing the start of it. We're seeing that it's going to happen. But how do we safeguard ourselves? Well, the term safeguard means that we are either risk averse or we're trying to keep things stable and safe that we've already invested in. So first of all, to safeguard, one has to understand the risk. So how do you as an individual, a business or the country safeguard yourself is firstly get an understanding, get a baseline of what is going on within the technology and within the financial market space. You have to understand the technology and the trends that are going on. Then only would you be able to gain the insight into the estimated risks, and then you can baseline what you need to do and how big a step you need to take against that. So as individuals, I would actually say strap in and take advantage of the market. I think you are saved to a large extent by and safeguarded by the central bank. That is why the central bank is there. But I think it is an exciting journey. I think it's an exciting thing to come into. But the markets are still volatile. Do not take this as me saying it's not volatile. I can't give you that kind of financial advice. But you can take the measures to learn and invest where it is clever. Talk to your financial advisor, talk to your banker, come to Mesh, come to Easy Equities. All those companies are there to help you along. As a business, I would say balance your exposure. Yet again, balance your risk. Understand what the market is that you're going into. But as a country, I would suggest that the country invests. This is good for our economy. This is good for where we're going to.
So is South Africa keeping abreast of these developments or lagging?
As with South Africa, always there's always two streams. I can say yes and no to this answer. I would say that currently where the formal sector is within South Africa, so where I mentioned formal sector, I refer to central bank and the financial institutions around that. I would say they're taking an extremely cautionary approach, good and bad, I would say, because they are responsible. They're looking into what the technology and the changes in the industry are bringing to boot, but I would say they're a bit slow. They're slow to adopt, they're slow to take chances, and they are slow to experiment to a large extent. I would not say that the private market is actually lagging. I would say that they are equivalent or staying abreast of everything that is happening. But definitely there is a greater need for private and public sectors to work together here to create a space within the economy that is good for innovation, that is safe for people to step into as well, because the most of the private market is asking the public market to come to board to help them to create a safer economy around this as well. So short answer, staying abreast, definitely not lagging within this space.
Thanks so much. Greg, before your question, Prof. Klopper.
Thank you very much, Marla and Connie. I actually got a few questions, but let me ask one because to allow people. If we look at this decentralization, and I really love what you're saying, and putting more power in the hands of the people in a disintermediated environment, how do we need to think from a central government system collecting taxes in future to pay government's bills to make the things in the country happen? Where's that going?
That's a very good question, because within the decentralized economy or community, I would say, I'm not going to call it economy in this answer, you definitely have people that are utilizing the technology to take a step away from central control. So saying, I now have the power of my money, I have the power of my finances in my hand, and I no longer have to comply to what is going on here. So I would say yes, but that is also a naive approach to take. You do, as a functioning and contributing adult within any economy, within any domicile. You choose where you need to live, and you choose to consume the services of that country, I would say. So if you consume any service, regardless of if it's a public service or a private service, you should expect to pay for it, because people have to make a living off it. They are servicing you to a large extent. So when it comes to taxation, a lot of people think that this is a black box, that when your money flows into it, it's decentralized. No one can get back to it. No one can see it. No one can touch it. To a large extent, that is true, but it actually makes a lot of things more transparent. So the government will be able to know where your money flows. They will know in what sizes that flows into. The big thing is that they would not be able to tie identity to it. And that is why there's such a big push and pull currently within the private and public sector about identity, trustlessness, and how do we actually control and regulate this instance. So the most of the people that are currently within the space, I would say, is not doing it for tax evasion. They're not using it to avoid it. They're not doing it to undermine the economy. They're doing it so that there is more clarity, so that there is more transparency, and so that there can be a hand-holding happening between the public and the private sector, that people can actually take this forward and make it happen. So that is a long answer, I would say. But in the summary, it will give more transparency, it will give more clarity, but there is still ways to go to make sure that all sides of the party are well balanced, and that we don't take advantage of the small guy just to make sure that state coffers are full.
Thank you, Connie. I think it's a interesting way, because in future we're probably going to become more mature as a human race, and this is the next step.
Definitely.
For that reflection. I appreciate that. Thanks, Dr. Koonen.
Thanks so much, Prof. Klopper. Greg has asked, platforms such as Easy Equities, I don't know how to pronounce this, Greg, sorry, VALR, and Luno seem to be gaining traction in the South African market. What makes Mesh unique? And then the second question, which I just want to give it to you from Dr. Sigamoni, so that we can, conclude after that, is there some governance around SARS, tax evasion or tax avoidance?
So let me end with the mesh question, because that's most probably my favorite question. And let me answer Dr. Claudia's question first. So is there some governance around SARS, tax evasion or tax avoidance? So a lot of people think that when you go into the crypto economy or the decentralized economy, that you're automatically avoiding tax or evading it. It's actually not true. There is not no tax in that space, but the onus does fall on you as the taxpayer to declare, as with all other assets within your control or within your ownership. So if you think that you can shift your money into that space, it's not true. You have to declare it. And there's also a lot of work being done by the SARB currently, so the South African Reserve Bank, within the Financial Markets Act, and with the with SARS and all the relevant government institutions, to make sure that there's laws in place to actually allow non-evasion of tax to happen. So the biggest thing to keep in mind in this space is, if you buy something within the crypto economy, you have to declare it, and you have to pay tax on it. What tax is it? Well, it's either income tax or capital gains tax, depending on what asset you purchase. And it is very much, I would say, encouraged to make sure that you cover your bases with regards to that as well, because the current regulations within South Africa does not allow you not to pay tax on those components. So lastly, let me answer Greg's question. Yes, so it's Easy Equities, Valor and Lunos are making some tractions within the South African market. Yes, absolutely. We love seeing that people are doing good within the South African market. But what makes Mesh unique? Why Mesh? So we haven't really talked about Mesh today, but I would love to share a bit more about that. So Mesh is a decentralized financial markets platform, and it is made to be multi-sided. So it means that people that create these instruments can sell it directly to the people that are buying them. You have direct access to that market. And in that is what makes Mesh unique. So within the other platforms, you go and you purchase directly from that company or that entity. So you would be purchasing your instrument directly from Easy Equities, Valor, or Luna, and you would be restricted to only the assets that they offer to you. What makes Mesh unique is that we have multiple issuers and multiple investors on platform. So you can buy anything. So think about it as an endless shopping mall where you can find all your financial assets that you would like to invest in. So from ETFs, ETNs, to cryptocurrencies, to stocks, to debt kind of instruments, bonds, and those kind of things. You can buy that directly from Mesh, from whether you're an individual or a big company, and you have direct ownership of what is yours. So when that asset comes and lies within your account, you're not exposed to Mesh. We're just a place through which you trade, and you can actually own and trade those things over their full life cycle as well. I see Louisa is also on the call, and she will be very happy if I mention this component to you. We are in open beta, and I can invite you to join the future of investment now. I hope that you find something interesting to invest in as well on Mesh.
Thank you so much for that. So I wanted to say to you that at Vinci, we speak about the fifth industrial revolution because for us, this is a critical merge between humanity and technology. And I think you have just really spoken to this in such an innovative way of how you're living out the fifth industrial revolution, even before it's time, so to speak, because at Da Vinci, we believe the time is now. So thank you for that. I now call on Letta. And Letta is going to show you how she perceived in pictures and images that she has skillfully drawn. She's going to show the audience as well as yourself how she thinks that you've presented today. Thanks, Letta.
Thanks, Dr. Coonan. So here is the visual summary in 2 minutes. Ms. Bloem said that she does two things: DeFi, taxonomy, I hope I've got that right, blockchain, and platforms. And at the end, you needed to know what is a financial instrument, what is a crypto, what is an NFT. The world really is changing. She told us a story about how trade was created. Someone had a sheep, someone needed corn. Sometimes there's some surplus, they would barter, they would change around. But then we started using money, and we needed to keep that money safe. And that's where banks came from. People needed more money. And she also spoke about the time value of money. But then the meaning of money is changing. And Web 3.0, we now have blockchain technology. There's actually less physical money than there is crypto. We're starting to become technical natives, and we're starting to change the world of money. The marketplace is becoming decentralized. It's becoming trustless, which is not a bad thing. It's just the new thing. We spoke about the new smart contract, looking out for opportunities in this market. It's a new way for us to interact. Invest, work together. There's amazing opportunities there. Tax, unfortunately, death and taxes, you can't get away from that. You still have to declare, do the right thing. It's either income tax or CTG. And Mesh creates an endless shopping mall for you to make use of this new opportunity. So that is the very quick visual summary. Dr. Coonan, back over to you.
Thank you. Thank you so much, Letta. Connie, I hope that represented what you feel it represented. As always, Letta, thank you so much for that.